Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my July pick. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has not been so positive since we grow as much as I expected in the daily number of visits, but we have experienced a slight deceleration in daily new subscribers. The evolution continues to grow, and I am trying to make different videos schedule, which only one per week. Wow! This month we have not exceeded the goal of reaching 1500 subscribers, despite getting so closer. So for this month the goal will be to reach 1550 subscribers. Do you think we will make it? The evolution of the investment made last week has not been good, as it has been flat, but in overall the portfolio has performed in a positive way with almost 4% growth. AbbVie, Vichy and Johnson are the best performers this month, while Nike, which dropped around 2% due to last month's expected revenue drop in 2025, and S&P 500 Information Technology above 5% downside. Remember that this is a very long-term investment, and that the objective is not to obtain a high return in the short term. So this large drop of both Nike and Starbucks since I made the purchase does not worry me too much, since I fully trust my estimates of the intrinsic value of them. The good news is that during this month we have received 3 dividend payments. Specifically €2.94 of Vichy Properties, €1.70 from Comcast, and the first payment of Nike since we bought in March of 28 cents. That makes a total of €4.92, and this makes this month the highest in dividend payments basis. This month I am going to make a change in the way I choose companies, and due to the huge drop that I have in Comcast, which is the only one in the communication service sector on my portfolio, I have seen the opportunity to expand them. That is why this month I am going to compare 4 different companies in the telecom service industry, such as Verizon and AT&T, which are high initial dividend yield and are companies that are potential yield traps, or companies that have less initial dividend yield such as Comcast or T-Mobile Us that also have better growth expectations for the future. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. Both Verizon and AT&T have a very poor dividend safety below 70, while Comcast has a better dividend safety of 89. Finally, T-Mobile US has no dividend safety because it started paying its dividend during the last year but has enough free cash flow growth expectation and very low initial free cash flow payout ratio, so I will consider that its dividend safety is 95. Regarding dividend yield, Comcast is the only one who has a dividend yield between 2.5% and 4.5%. That is the range I am looking for. However, if we look at dividend growth, the situation changes completely, since the stocks that had a higher initial dividend are those that have the lowest growth. Additionally, AT&T has had some dividend cuts in the recent year, and Verizon barely managed to give us a dividend growth very similar to the inflation rate. Continuing with the evolution of the revenue and earnings of each company, only T-Mobile and Comcast have a positive evolution, while Verizon 1 is very flat and AT&T has a negative evolution during the last decade. Now, if we look at the evolution of free cash flow per share over the last 10 years, Comcast and T-Mobile US had a positive evolution. However, Verizon and AT&T have had more flat evolution. It is also very inconsistent with drop and ups. As I mentioned in my previous videos, I want to make investments in companies that make buybacks. However, only Comcast has a clear buyback program. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to a fair value analysis. Comcast, Verizon and T-Mobile US are below the 5-year average price-to-earnings ratio, while AT&T above them, indicating an overvaluation of their price. Moving on to yield on cost, here T-Mobile US is the clear winner with around 20% compound annual growth rate over the last 10 years. While Comcast barely managed to have 5% compound annual growth rate on their yield on cost during the last 10 years, and the other two companies have less yield on cost than current dividend yield. Finally, we will see the total return that each stock has offered during the last 5 years. Here T-Mobile is also the clear winner, while the other three are between -10% and 10% range in total return in the last 5 years. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Comcast has obtained the highest score due to his attractive price-to-earnings and buyback program. As a result, Comcast will be our pick of August, and this month also we buy a stock that I bought for the second time. Then we enter the Scalable Broker and carry out the operation, looking for the Comcast ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. So introducing 4 shares we would make an investment of €141.16, so adding the commission of 99 cents, the investment amounts to €142.15. I would like to emphasize that I made the purchase on the 29th of May after a huge drop in Comcast's price, as you can see in this TradingView graphic. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, the Comcast ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €142.15. Since I have already placed the ticker in the first column, it has automatically added the number of new shares and the new average price per share. Surprisingly, with this new purchase the total return goes from -10% to around -1%. Additionally, this investment will allow us to reinvest 0.23 shares annually via dividends, when before they were only 0.08. Impressive, right? As we are already in the month of August, I will move on to the monthly value sheet, and in the month of August 2024 we will write the €1,672.90 that our investments are worth in the market. This month the portfolio made an upside of 3.93%, which is more than the -0.50% that VOO, S&P 500 ETF, has obtained in the same time period. So this month we outperformed the market. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month.